Starbucks enjoyed a strong second quarter, exceeding profit expectations boosted by strong sales in both the U.S. and China. Despite the solid performance, the coffee giant's outlook was unchanged for the year ahead. Starbucks CFO Rachel Ruggeri joins us now alongside Yahoo Finance's own Brooke DePalma. Rachel, great to have you here with us this morning. Brooke and I were actually listening into the call last night. Top-notch work on some of the coffee puns that you guys put forward there. Always enjoy hearing those. But first, we got to talk about what the company, what you, Luxman, were putting forth to the investment community in this reinvention or this refounding of the company and of the brand. Take us into that, the reasoning behind it, and how investors should evaluate that.
I would think about it as, as Luxman even shared in his prepared remarks on the call, of the 5 areas that I would call our strategies, his areas of focus, one of them is to reinvigorate our culture and to remind our partners what it means to be a partner at Starbucks, what it means to be part of this company. And so the refounding is really about paying homage to our past, which is so incredibly important, but also recognizing that there's an evolution. We're in a new day, we're in a new time. And so that's what the mission, the new mission really holds true to. And I think as it's been received by our partners, there's a lot of excitement around it. People are feeling a renewed sense of purpose, an inspiration. And so it's landing really, really well. And I think it just galvanizes us in this moment. And it's one of many aspects that we need to do to continue to create an incredible partner experience and to make Starbucks the best place to work.
Hey, Rachel, it's Julie here. Even with that rejuvenation, which we clearly saw in the first quarter numbers, you guys didn't raise your forecast. And I'm curious why, because even as you have that within the company, there's also obviously external factors, as always, that are happening. What are you seeing out there that is discouraging you from making that step to raise the forecast?
I would look at it as we had an incredible quarter on every single measure, and we're incredibly proud of that. We had growth across the globe. We had momentum in our reinvention, which speaks to the fact that our strategies are working. We have abundant opportunity ahead of us, and we had really strong recovery in China, and we're in a position of strength there as we continue to recover in the market and as that market continues to recover. All of that actually gave us the confidence to be able to reaffirm our guidance, which we think the guidance speaks to the momentum, but also to the opportunity we have ahead. I mean, when you think about that guidance, it's 10 to 12% revenue growth on a full year basis. It's solid margin expansion, and it's earnings at the low end of 15 to 20%.
But Rachel, if I may, does that imply, though, slowing from that momentum that you saw in the first quarter?
No, it actually takes momentum to be able to achieve those results. It's maybe not at the same pace in some of our areas, but we continue that momentum. And so that's part of what allows us to be able to reaffirm the guidance.
And let's talk about one of the quarters that beat Wall Street estimates, China, same-store sales. You saw a faster recovery than expected there. You saw average weekly sales grow, or rather expect average weekly sales to grow in a more moderate rate in Q3 and Q4. How do you essentially keep up with the momentum that you're grabbing now and keep that sustained?
It really comes down to the very deliberate actions that our partners and our leaders in China have taken over the past couple of years. So we've been intentional in continuing to invest even during COVID. We continue to open new stores. So we have a market-leading portfolio to be able to capture the traffic. We've evolved our omnichannel strategy, which allows us to create new occasions and bring in new customers. And in addition to that, we've honed our operational muscle. And so all of that combined puts us in a position of strength that we believe will allow us to continue to lead in the recovery.
Is that momentum that you are experiencing right now and foreseeing, is that going to allow it so that the brand can get back to the light teen margins, light teen percentage margins that you had seen in the past?
At the total company level, what we're guiding is that we'll continue to see our margin expand. So solid this year, progressive in the future. And so what that means for us is we're more anchored on the revenue and the earnings growth as we've shared. So the top line revenue growth of guidance is 10 to 12%. Earnings this year is at the low end of the 15 to 20%. That allows us to be able to continue to expand margin, which is critically important, but it gives us the flexibility to be able to continue to invest back in the business, which is really important as we think about creating the very best experience for our partners and for our customers. We need that flexibility to be able to continue to invest to grow and then sequentially to be able to grow to invest.
And Rachel, let's move this conversation back here to the U.S. We have this conversation, it seems like every quarter, where the U.S. consumer continues to not push back to those higher prices. Are you able to share just how much Starbucks has raised prices year over year, and any sort of sentiment that you're seeing in April, any sort of pushback now?
What we'd say is we're continuing to see the momentum. And, that was supported by our guidance of a 7 to 9% comp for the year and for the remainder of the year for our U.S. and North America business, which you think about of our size and scale, that's a pretty impressive guidance. And what that supports is we continue to see our customers return to us for reasons of the product innovation that we have. So the fact that we have a purposeful product innovation in areas like refreshers, ice shaken espresso, cold foam. Those are difficult to make at home. They give customers a reason to come in. And then our partners create a really amazing experience, which give customers a reason to come back. That coupled with the fact that we have a leading digital program. So our rewards members grew in the quarter to 30.8 million, up 15%. Rewards members are typically an indicator of a consistent demand. And in addition to that, we have an evolving capability around convenience. All of that, we think, helps strengthen our business and position us so that we're able to help with the resiliency that comes in a number of different headwinds.
Rachel, did I miss in there how much prices went up?
Well, what I can say is our ticket this quarter, as evidenced in our 12% comp, it was balanced between ticket and transaction. Our ticket this quarter was about a 6% ticket comp. That's pretty indicative of the annualization of the pricing moves we took last year. We would expect that to start to moderate in the back half of the year as we get to more historical levels of pricing, which we've shared is typically around 1 to 2%.
That's going to be welcome news to some heavy Starbucks users here on our team, Rachel. So prices, what it sounds like then you're saying is prices will still be going up, but it sounds like at a much lower pace than they have been when you're talking about getting back to those more normalized levels.
Yes, I mean, typically we took pricing as a way to be able to, support some of our investments and our overall productivity. In the last couple of years, pricing has been taken more in line with inflationary pressures. And so, now that we're annualizing that, we'll move more to historical levels of pricing. And I think what's an opportunity at Starbucks is we offer a number of different ways to connect between our premium products, between our modifiers. So customers have a choice in terms of how they customize their beverage and the subsequent ticket increase and the subsequent ticket that creates.
Look, I know that there's been a ticket increase because I just purchased my first s'mores frappuccino yesterday to watch the earnings call, Rachel, and I don't even know what I paid. But at the end of the day, when we think about the business that you've been talking about, not only yesterday on the call, but even here today, the business of human connection is what you were framing this go-forward story for Starbucks around. But that human connection, if it's becoming more expensive, it becomes a little bit more of a luxury. So how long should consumers expect to have to pay up for a higher priced cup of coffee?
It really comes down to the more premium experience. So it's about, continuing to be purposeful in our innovation so that we create beverages and food offerings that give customers a reason to come in. In addition to that, it's part of our reinvention plan is really about being able to position our stores so that we're taking out constraints, so it's a more stable and efficient environment, so our partners have the time to really be able to support that remarkable level of experience. Lakshman spoke about it on the call with theater in the front and factory in the back. So really being able to do everything we can do to support our partners in creating the very best experience. And that's in whatever channel you come to us. And we believe that's the proposition. That's always been what Starbucks is about, that human connection. But being able to evolve it in this, age of convenience, I think is a proposition about Starbucks, a value of Starbucks that differentiates us.
So does that mean the price of my pumpkin spice latte is going to be flat year over year by the time we get to August? Or is it going to be more expensive?
That depends on if you add cold foam, if you add extra syrup, it really comes to you.
I'm so basic.
Then if you're basic, then I can tell you that you're going to be basically probably the same.
Rachel, let's talk about the partners, those employees who are serving perhaps perhaps Brad his pumpkin spice latte. I know that Lakshman in the call noted that turnover was down 9% from a peak and average hours per worker were up 4%. But he did say that partner scheduling is an opportunity for us. What sort of changes can employees expect from here?
We're working on tools and technology as well as processes to be able to support staffing and scheduling so that partners get the hours that they want and the hours that they need, which is incredibly important when you think about an overall compensation formula. So it's not just about wage and benefits, which is critically important, but it's about the hours that you need to be able to support, your particular life. Some partners want less hours, some partners want more. And so what we're working on is really being able to find that right balance. And as we've evolved this year relative to where we were in the past is everything that we're doing is on a more targeted individual basis. And so by being able to be more targeted, we're able to be more effective with our overall investments. And that's really what the proposition is around as we look to provide more opportunity for staffing and scheduling. And we look at that as just another way to continue to attract the very best partners, but importantly, to retain them. And in fact, this quarter, we saw our tenured partners, which are partners that are between 1 and 2 years, increase from 15% to over 31%. That means we are retaining a more stable environment, a more stable partner base, and that has huge implications just in terms of the stability and the efficiency in our environment and the service that our partners can provide to our customers as well as to one another.
And Rachel, very quickly, we have to ask about that Oleato drink. I know that it was one of the top 5 launches. What sort of frequency are you seeing? Are customers buying it once and then again and again?
Well, it's early days. I mean, we've rolled out into 500 stores in the U.S. We're in Japan. We're in, of course, Italy with the launch in Milan. And so we're in the point of adoption is what I would say still. There's, as you know, with it being a top 5 launch, there's an incredible amount of awareness and interest. And I think what Oleato really speaks to for us is that when we do scaled, profitable innovation, it fuels our performance. So I look at Oleato as, one step forward in continuing to drive that uniqueness and that innovation that draws customers to Starbucks.
All right. I will say that I did enjoy my secret menu experience at Starbucks. Starbucks CFO Rachel Ruggeri and Brooke De Palma, Yahoo Finance's own. Thanks so much, Rachel. Appreciate it.
Thank you.